Good afternoon. Welcome to the weekly Livestock Market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
How are you doing weather-wise this week?
So we're doing actually better for the first time in a while. It's nice to get some rain in at least some parts. Not probably making up for the dry weather, but at least some current rain to hopefully green things up a little bit. It's been pretty dry of late.
Well, hopefully we can continue to see some rain, not that it hinders planting progress, but enough to help spur some growth and take care of that grass situation.
Yeah, for sure. And you asked me that question as it's slowly sprinkling outside right now.
Always a slow and steady rain, right? Not the downforce. That's what we ask for, not to get too needy or ask too many favors this time of year.
That's right.
All right. It's really not a big week for us, although it was a big report, not a big week for reports for us. We're going to talk cattle on feed numbers. We'll preview a little bit what we're looking ahead with next week's cold storage and livestock slaughter reports. But to kick things off, let's recap what happened this week in the markets.
Yeah, Meghan, this week in cattle markets, those live fed cattle prices were about 40 cents higher this week. On the feeder cattle side, feeder cattle auctions were anywhere from $1 to $3 higher on the week. When you look at the future side, strength there this week, the June live cattle futures contract was up $1.50, and the August feeder cattle contract closed up $6.15. So a strong week there. Part of that, I think, was due to what was 27-cent lower July corn futures this week, as some are thinking feed costs will go down in front of us. On the beef side, the choice box beef price was down $6.80. We really lost across the board in all those components on the beef side. Hog prices this week, barrels and gilts were $2.85 higher on the week. The June lean hog futures contract was down nearly $1 on the week. We did gain $1.65 on the pork cutout value. That now puts it about $20 below where it was relative to a year ago.
It really was a kind of a wild week on the cash hog market for a couple of days. We saw them pull back a little bit at the end of the week. When we see that kind of a movement, what kind of spurs just such a big jump and a big change?
So I think we're trying to search a little bit for what do we have coming. I think you can find some signs. Maybe we're going to find some contraction in that June hogs and pigs report. We'll wait and see. But as you see signs of maybe some changes coming, I think that's had some effect. Maybe some stronger demand as well, starting to show up. And again, as we saw this week, at least some higher pork cutout values. I think those are the two pieces of what is demand going to look like. Do we have a bottom coming at some point and get some recovery? And I think that's then hog prices trying to find the right spot for them as well.
I know we're jumping ahead, obviously, quite a few weeks because that quarterly hogs and pigs report doesn't come out until June. But how much are you anticipating what that report says, just to kind of see where things are moving in the cattle sector in the hog sector because of the supply situation and what's been going on recently?
Yeah. So I think we're all, so I guess I back up for a minute and say, I've always said it's hard to get contraction in this industry. Once you've made the investment in hog facilities, it's hard to shutter those facilities. You may find someone that's going to go out of business, but as long as those facilities are still in shape to be operational, somebody likely picks them up. So has the last several months been tough enough financially to actually kind of buck that trend of, at best, you're just sideways, which is really what's been happening in the industry for the last several months, at least until we've really started 2023. Now this idea of are we going to see some more liquidation in those June numbers? And you can find, anecdotal information that would suggest we've got some folks that are liquidating sow inventory. How long does that last? Is it temporary? Is it permanent? I think there are a lot of questions at play on the supply side of hogs right now.
Scott, let's take a look at weekly slaughter numbers. How did they stack up for cattle and hogs this week?
Yeah, so USDA tells us for the week ending May 20th, around 642,000 head of cattle. That's 4,000 head below what we ran last week and 35,000 head below what we ran a year ago. On the hog side, around 2.408 million head this week. That's 40,000 more than we ran a week ago and 5,000 more than the same week a year ago.
As we take a look at those numbers year over year, how are they comparing?
Yeah, so we're down 3.3% in terms of cattle slaughter year to date and up 1.5% on hog slaughter year to date. Almost hit 50 million head of hogs that have been slaughtered thus far in 2023.
The big report for the week, and the only report we're going to talk about, cattle on feed numbers came out a little bit ago. As we take a look at those numbers, are you surprised? Is anything in this report outside of expectations?
So no, not really, Megan. So we had some wider ranges, especially on placements in April, high to low of somewhere around 92 to almost even with a year ago level in terms of those pre-report expectations. But when you look at where we came in on things like placements, 1.748 million head for April, that was little more than 4% below a year ago and came right in close to pre-report expectations. On feed May 1st of 11.608 million head, also very near pre-report estimates, just off a tenth relative to that average pre-report estimate. So we really didn't get a lot of unexpected news out of this. It just continues to remind us that we're in a much different place than we were in 2021 and 2022 in terms of fewer placements and less cattle on feed. It's going to keep supplies short as we look for the next several months.
This is one of those odd or one-off, I would say, months where we don't get livestock slaughter numbers that come out as in companion with it. As we look ahead to next week, what are you looking for in both cold storage, but more so the livestock slaughter report?
Yeah, so I think it's going to be much more, so when you and I talk about cattle slaughter down 3.3% year to date out of the earlier portion of this conversation, what's the makeup of that? What's beef cow slaughter look like? In any indication we're building in some parts of the country, I can hear some of those stories in some parts where weather's been better. I hear other places where probably still liquidating cows. So I'm very interested in what that cow slaughter looks like in the report. And then just again, cattle slaughter itself, what's happening to steer and heifer slaughter as we've started 2023. I think it sets the stage a little bit for what happens here in the second half of this year and just where cattle prices could continue to go. Probably going to go higher. Are they going to stall out here? I think there's a lot of questions we can get out of that livestock slaughter report.
Just to slip back a little bit to that cattle on feed report, as you look ahead and we talk about in comparison to what markets may do or how markets may react, since there's not a lot of surprises in it, does it just kind of sit up to be fairly neutral when we start business back up next week?
I'm going to be surprised for it to do much in either direction, just given the numbers. We're just so close to pre-report expectations and the confirmation of what we've been seeing for the last few months of less cattle on feed and generally lower placements. I don't think markets are going to react too much to the news, and that's probably both short and longer term futures. I don't see a lot here that's going to make me think markets behave erratically on Monday. Having said that, we'll probably get some big changes, but for now, I don't think that's going to be the case.
Long term, as we take a look at the supply situation and what's going on with placements, with slaughter numbers in general, how much concern is there in terms of pricing on the consumer side of things as we look ahead?
So we can't say there's no concern. I often will go back to the high income earners likely don't shift meat consumption patterns much given relative prices. If they want a really good steak, they probably don't care too much about the cost of that steak. Their ability to pay more is pretty easily handled. For those lower income consumers, I think that's where this is more of an issue of, do this cheaper chicken and pork eventually nudge beef out of the center of plate a little bit more for lower income consumers. So I think that's what we have to worry about. And that probably means some cuts of beef are more likely to see pressure from those competing products than some of the higher, more prime cuts that we might talk about. So we certainly have to continue to pay attention. And of course, the rest of the consumer discussion matters here of what's income like, what are they paying for things like fuel, housing, et cetera. I think all those things matter in terms of what's left in that budget for meat consumption, and does that affect then that purchase of beef versus pork versus chicken.
Scott, that'll do it for us this week. Anything else?
I think that's it, Megan.
Have a great weekend, and we'll talk to you next Friday.
Sounds good.
Our weekly livestock market update delivered to your email box every Saturday morning at brownfieldagnews.com. You can also submit questions and comments there. And for a rundown of what happens every day, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.